The odds of Trump's tariffs being legal just collapsed to 18%. And if the Supreme Court strikes them down, the U.S. could owe up to $1 trillion in refunds. Get ready for more big moves.
All eyes were on the Supreme Court tariff ruling today, and it's actually much bigger than most people realize, so much so that Trump is even saying that this is life or death for the United States. Now, today was mostly just arguments for and against the legality of tariffs that were used under the IEEPA or the International Emergency Economic Powers Act. Now, conservative and liberal judges were grilling the Solicitor General, John Sauer, about the legality of these tariffs, and a lot of the conservative judges showed skeptical, or there was just a lot of skepticism as they were grilling the Solicitor General here. Now, this ended up causing a lot of prediction markets to tank down on the actual outlook that the Supreme Court will rule in favor of Trump's tariffs. The Supreme Court actually heard more than 2.5 hours of arguments, and like it says here, at least CNBC is citing, it's not clear when the court will actually release this ruling, and they said that they will not issue a decision on the case this Wednesday. So, of course, we're going to have to look at the decision coming out over the next couple days, but it looks like that the prediction markets are now only pricing in, at least on Kalshi here, a 31% chance that the Supreme Court will rule in favor of Trump's tariffs. And as we saw on Polymarket, it actually dropped down to as low as 18% in the middle of the day today.
Yeah, so there's definitely a lot of worry and uncertainty with this tariff situation. And while Trump and others have mentioned that there's alternative methods they can use if the Supreme Court does rule against them, this is something that can just kind of jumble everything up, create more uncertainty, and just create unnecessary problems in the market right now. Tom, when we look at the market today, it held up pretty well. There was a little bit of volatility towards close, but when we look at how prices are actually moving, what are you seeing on the charts and what should we look out to?
So SPY did start to recover up today. It moved up 0.35%, and I wouldn't really call today a massive day by any means, okay? The SPY did move higher, but even with the end of the day drop down, it didn't really close up all that much. Now, if we actually zoom out on the SPY, we go to like a 15-minute chart, we can see that there's been a clear downtrend from the all-time high. And along this downtrend, there's been a few points where the SPY is hit and rejected right back to the downside. Again today, there was another clear hit on this trend of lower highs. Now, whenever I think about this, I'm going to be watching this over the next few trading days to see if the market starts to form a base. There is a good support range down here around 674 to 672.50. Now, 672.50 was the low from pre-market this morning and after hours last night. 674 was the low in pre-market on Tuesday morning. Whenever I look at this range, if we break below there, I will get a lot more bearish with the SPY in the short term. And we talked about a range yesterday between the 674 to 675 range and 680. 680 pretty much held up again as the high of day from today, and the market actually filled the gap from the gap down from Monday into Tuesday morning. I thought that that was a really big thing to see, and it filled it pretty perfectly too. So keep watching that high of day from today. If we're able to break through that 680-ish range, I think that we could start watching SPY back up, but I don't want to jump the gun too early here because of the downtrend.
Exactly. Like, this is a meaningful downtrend. It's not like the market is in panic mode by any means, but, you know, it's in a tough spot and it has some work to do if it does want to get back closer to highs. One thing that I will say, though, related to like the main catalyst right now, which is the Supreme Court tariff ruling, luckily, there is like a very low chance of like the worst case scenario where the U.S. would have to refund the tariffs. Luckily, it's only around 19% right now, which is good. But what's not good is that is basically double what it was, you know, just a couple days ago and just a couple weeks ago. So let's keep this area in mind for a potential risk, but there's nothing to freak out about just yet. And as we are in November, this historically is a good month, so that is working for us. November, on average, is up around 59% of the time. It's up by around 1.01%, and that's with data going all the way back to 1927. So that's almost like 100 years worth of data here. You know, this is good to see, and I'm definitely not complaining about it.
Yeah, me either. And December looks pretty solid as well, with its average percent rise being 1.28. So these next couple of months are generally pretty bullish. So again, I won't complain either. I know the market started to recover up a bit today. Maybe we'll end up getting back to new all-time highs here pretty soon. But Mike, whenever we talk about the overall market, there's obviously a lot going on as well with the government shutdown. And there was a pretty big headline today that Trump actually said that the government shutdown is now affecting the stock market a little bit. I thought that was a pretty funny statement there, but we can see here in quotes, he was saying a lot of things. One of the biggest sentences that he said was, "We have the hottest economy we've ever had, and it's affecting the stock market now a little bit." But the stock market as of Friday has hit many record highs during the last 9 months, and it will do it again. So in his words, he's saying that we'll be hitting new highs here again pretty soon, and I guess we will see. But this week we did see a bit of a turnaround overall out of the market.
Yes, and prediction markets, they're pricing in the government shutdown to end in around 10 days from now. So, we still have a little bit more left to go. Obviously, the sooner this can end, the better. And if there's any developments where Trump or, either side is not willing to make a deal, that just causes more hurt and it brings more risk to the stock market. So this is another thing that we will keep on our radar. But also, we have some pretty interesting data that when this shutdown eventually does end, we can see it generally is a good sign for the stock market in like a medium-term sense. 1 week later, the stock market's green and red like 50% of the time, so there's nothing useful there. But like we could see when you look out further, the stock market does tend to do pretty well.
It really does, especially on a lot of those older readings here whenever the government shut down in like the 80s and 90s. I gotta say though, Mike, whenever I read through here, I am worried because in January of 2018, the government shutdown ended and we actually saw a lot of red price action throughout 2018. And I don't know if you guys remember what was going on back then or not, but tariffs and a lot of news with China really drove that downside pressure. And, we're dealing with that a lot this year as well. So just keep that in the back of your minds. But it definitely is painting a pretty picture here, at least for the market. And Mike, I know that a lot of traders have been eyeing up the earnings this week. Robinhood actually reported tonight. Unfortunately, they didn't have the best reaction so far. I would say kind of mixed as we go into it. Of course, there were a lot of other stocks reporting as well, like Qualcomm, which dropped off to the downside and even helped incite some selling pressure with Nvidia in after hours, at least initially there. So that's what we're looking like on the earnings calendar. If you guys want to keep a screenshot of this, go ahead and take one, but this is what we're looking like. I will be liking DraftKings and SMR tomorrow personally. And Mike, today we did have ISM Services PMI, some ADP employment numbers, but really we're clear until Friday where we're going to be having Michigan consumer sentiment data releasing at 10 a.m. Eastern time.
Great to hear. So the schedule is mostly clear heading into the rest of the week. And as we know, one thing that we like to do on the channel is not just show what the stock market is doing on a day-to-day basis, but also what it looks like from a more zoomed out perspective. And we can see right now, stocks are just priced in a pretty aggressive way. We can see that the forward PE ratio is among one of its highest levels over the past 25 years. We can see the average is closer to like that 16.5 mark. Right now we're sitting right around 23. Basically what this means is that, valuations are expensive right now and they're more expensive than they are historically.
Exactly. Like, we're not out here trying to really, incite like a lot of insane selling pressure or anything like that, of course. I know a lot of people like to think that, but nonetheless, we're just showing you guys this. It's just another piece of info that shows that we're at a pretty crazy point right now with the overall market. And there has been a lot of talk this week about valuations being a bit too high. So we figured that we would show this data. I found it very interesting that we would be this high on the chart. This even beats the peak during, all the COVID craziness there whenever we had the post-COVID run and then, the eventual downturn from that.
No doubt. All right, Tom, well, let's get right into the fun stuff for today's video, which are some setups and predictions. A stock that is still on my radar is SMH, and it is to the downside. I know I mentioned this one in yesterday's video. It popped up a bit today, but basically this ETF follows chip stocks. And one thing that I really did not like to see today was how Nvidia closed. They have been selling off a decent amount over the past couple of days, and today's drop was definitely overwhelming to the bearish side. There was a lot of selling pressure that came in towards close, and this just further reinforces my bearish outlook on SMH over the next week or two. Looking at SMH, we are seeing more profit taking with big tech and AI stocks, especially after Palantir's earnings. And I think SMH to the downside offers a good risk reward where maybe in the worst case scenario, SMH continues to move up and it can get cut pretty quickly, probably before like that 368 level and maybe even sooner than that. But in an ideal scenario, if SMH pulls back, I would not be surprised to see this get to like that 320 area or maybe even lower.
Yeah, I could see it pulling back quite a bit. It is pretty overextended. And, I know a lot of people might think that that's a pretty crazy outlook there. But overall, if SMH does fall down, I could see it having a pretty good drop as well. But with my first stock, I'm actually looking at SMR for a bit of a short-term recovery play here. If we look at SMR on the hourly chart, it's actually around a pretty critical support range. Now, I'm looking for the support range to overall hold up. Now, this would be in a scenario where we would actually see the market continue to move higher. Now, SMR does have earnings coming up later this week on Thursday. So keep that in mind. This would mainly be a play for tomorrow for maybe a pre-earnings run-up possibility. Now, again, we have to be very careful. I wouldn't necessarily hold this through the earnings, but let's also say that the earnings go well and we see SMR start to bounce off support. I will watch it back up off of the support in an overall basis as well. I am a bit worried with a few of these stocks, Mike. They've been getting pretty overextended lately. So, of course, as always, I will always keep the possibility of a downside opportunity in mind if the earnings go south and we do end up breaking below some of these key ranges over the next few days. But, of course, that would be a post-earnings scenario. For tomorrow, I'm mainly looking for a breakout opportunity past the high of day around 39.35.
Sounds good. This has been a pretty hot stock. I will also keep it close on watch. But another one that is definitely on the radar as well is Enphase, and it's to the upside. This stock crushed it today as it moved up by around 11% on news that its CEO purchased 10,000 shares of the company stock. So that was like a total investment valued around $309,000. And he also had other purchases over the past year as well. This obviously shows a good sign of confidence, but Enphase has also gotten beaten down so badly, not only just over this past year, but especially over the past couple of years, where I think at this point, given how much it's down and this recent news, it offers an asymmetric risk reward playing it to the upside. Enphase right now is trading for around $32 per share. In the worst case scenario, maybe it gets back below that like $30 psychological level. And if that happens, then it would just be a losing setup. But in the best case scenario, Enphase can get back above that like $36.80 to maybe even like that $37 level and be a good setup. So either way, it is on my bullish radar.
Yeah, the risk reward setup here is pretty awesome, especially if it holds this $30 range. And there is some real actionable news there as well with the CEO purchasing a lot of shares. I'm sure that they'll be looking for a nice gain out of those, hopefully. But with my next play, I'm looking at Nvidia to the downside. Now, I actually called this play out yesterday. And of course, today, Nvidia actually double bottomed from pre-market and never really had any downside or meaningful downside action, at least until around that market close. Overall downside drop. Now, Mike, I know you're watching SMH overall to the downside in the short term as well. This is a similar play. Nvidia might be a bit more volatile though, so keep that in mind. Just if you are going to play it, realize it had that big end of day drop today, and I thought the way in which it really broke below the pre-market low around 194.50 to 195 was a pretty critical thing to see too. So for tomorrow, if it can re-break below the low from pre-market, or sorry, in after hours here tonight, around 194. Watch it down, and there's actually a good target around $190 coming up, where there's another big buy wall. That 195 level held up great this morning. That was another area that we talked about where there was a lot of buyers stacked up yesterday. So keep your eyes on that 190 range. If we do end up getting down to there, just be careful of a bounce. There's always a possibility that momentum could carry the stock through there, but it would be a great first target.
Sounds good. All right, well, let's jump right into today's momentum plays then. And with the first one, we have Big Bear AI, ticker symbol BBAI, to the upside.
Nice recovery out of them today, up 6.98%, almost pushing that 7% number. If they break out above $6.21, then watch them to the upside.
All right, with the next one, we have Oklo, ticker symbol OKLO, also to the upside.
Yeah, another nice recovery, up 8%. If they can break out above 123.50, just above the high of day, then watch them up as well.
And then we also have DraftKings, ticker symbol DKNG, to the downside.
Poor DraftKings, down 2.4%. If they end up breaking under 27.80, then watch them down. But I will say, Mike, DraftKings has been getting hurt a lot lately. I know that we talk a lot about Kalshi and Pally market, and it's unfortunate for DraftKings. It's really been taking a toll on their shares.
Big time. Yeah, it has struggled quite a bit this year. But either way, let's keep these three stocks on the radar for potential continuations. Whether you trade one of these three stocks or anything else, focus on protecting yourself. Making smart, long-term oriented trading decisions should be the number one priority. And if you need help with that, check out the Key Lessons channel in the StockedUp Discord. But besides that, Tom, let's jump right into today's $475,000 big money trade, and we are looking at ticker symbol VZ. Today, the trader here bought the 42 strike call options that expire on September 18th of 2026. This is a $475,000 trade. It has a fair amount of time to it. These options are a little bit far out of the money, though, which does increase the risk that this can be a covered call trade. Again, they have a lot of time to that, so that kind of, you could say, decreases the probability of it being a covered call trade. But looking at Verizon, the company has been recovering pretty strongly from its lows 2 years ago in 2023, and it has been making higher lows basically the whole time from that point. Looking at this trade, I think it's an interesting setup. I don't think it's the craziest trade ever, but it's one worth keeping on the radar.
Yeah, over the past few years, whenever VZ is pulled back, it has ended up bouncing pretty well off of some of these areas of support, and there is a lot of time to this trade. Going out to September 18th of next year, it's definitely not something that the big money trader is going to probably be very worried about for the next month or two, right? Of course, they're probably going to have a much longer outlook on this play. So if you want to maybe look at Verizon in the shorter term, just realize that's probably not what the big money trader is doing here. But I really do like this shorter term support nonetheless around that 38.50 range. That is a good bounce that we're starting to see, and that is a pretty critical area where Verizon had bounced multiple other times in the past where it acted as resistance. So keep your eyes on this play. I like the way it's holding support. Now, if we do start to see support give out, I will be a bit worried, but there is a lot of time to the play though. Like, we could go down for the next month or two and then, of course, go up for the first 3 months of 2026 and more than make up for it. So just keep that in mind. Sometimes these, especially the plays that have a lot of time, need some extra wiggle room.
Definitely. So either way, let's keep it close on watch. And if you are new to the channel, welcome. Every single day, we cover the most important news, information, chart setups, big money plays, SPY levels and analysis, important events, earnings, historical stats, and basically everything you need to know in the stock market. If you subscribe, you'll get our videos recommended to you more often. So definitely consider doing that if you haven't already. And let's also give a giant shout out to today's member of the day, Capped in the StockedUp Discord, who had a lot of nice profits today. So huge shout out to you. It was very nice to see gains like these. That was awesome. So huge shout out to you and keep up the great work going forward. We are in a spot where the market is definitely at a point where volatility is starting to heat up, and we are starting to see things that we haven't seen in a while. Like, we're starting to see some real selling pressure come into hot stocks like Nvidia, Palantir, and others. This does, of course, make the market more volatile while we have the government shutdown being the longest in history and not showing many signs of ending soon either. Plus, we have all of the Supreme Court tariff drama going on as well. So it should be an action-packed at least next couple of days in the market, but realistically longer than that. So should be interesting, and there should be some good opportunities. Thank you all so much for watching, and let's crush it in the market tomorrow.